Welcome back to Teshkid FX for another Quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Quant chart, which has managed to lose a key area of support at around the $147.9 mark. We are also trading below the 20-day MA here on the 4-hour chart, which is now acting as resistance, and Quant has also continued to obey the Elliot structures, and we are just about to fully maximize the target area that I had given you in my previous videos. And before I get further into the technical analysis, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to start the video here on the 4-hour chart by first giving you a recap of what has been happening, where you can see that Quant, after making it to an all-time high, we started the bear market where we had been seeing lower prices in this ABC corrective structure, which took us back to around the $40.1 mark. And after seeing the bear market low, we started a very nice bounce to the upside in a move that had been obeying the Elliot structures, where you can see that I have this Elliot structure in blue, having the wave 5 making its peak at around the $229 mark, and also completing the formation of that larger Elliot wave count 1 to the upside. And after seeing the formation of that first wave to the upside, whatever we expected next is a corrective structure in the formation of a larger Elliot wave count 2. And using the Fibonacci's, I was able to come up with the target area as the minimum that I expected that second wave to the lower side. That is this red target area that I have right here, and it is within this red target area that I was expecting to see the low for that second wave. And because the second wave is a corrective wave, you can see that I have this ABC corrective structure giving us the low for that wave 2 at around the $94.4 mark. And after seeing that low, whatever we expect on the long-term scenarios is a bounce to the upside in the formation of these larger Elliot wave count 3. And by first giving you a minimum target area to the upside in the formation of that wave 3, using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, that gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $399.7 mark. And that is the minimum that I'm expecting that wave 3 to the upside to do, and that is my long-term target area here on the Quant chart. And getting to the short-term scenarios, basing it on the formation of this wave 3, which is an impulsive wave, we also expect to see a 5-wave structure in formation within that wave 3. And right here on the charts, you can see that I have this Elliot wave structure in red, where I'm terming that as the first wave. Then we have seen a corrective structure in the formation of that wave 2, and I believe we have also seen the high for that wave 3, and whatever we are seeing at the moment is a corrective structure to the lower side in the formation of that wave 4. And once the wave 4 is in, then we can expect another bounce to the upside in the formation of this wave 5. And by first showing you that this wave 3 has done the minimum that we expected it to do, using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, then dragging the fibs to the high to the low of the second wave, that gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $163.9 mark. And you can see here on the charts, we made our high at around the $165.5 mark, meaning we fully maximized that target area to the upside at the fib level 1.618 and even managed to break above it. And whatever we are seeing right now is the start of a corrective structure to the lower side in the formation of this wave 4. And by first sketching out a minimum target area to the lower side in the formation of that wave 4, using the Fibonacci's, connecting them from the low of the second wave to the high of that wave 3, that gives me a minimum target area to the lower side in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5, and that target area lies between the $141.2 mark and the $133.7 mark, and that is the minimum that I'm expecting this fourth wave to the lower side to do. And since we have lost a key area of support at around the $147.9 mark, then there are chances of continuing to unlock even lower prices and fully maximize this target area. Also note that here on the 4-hour chart, we are also trading below the 20-day MA, meaning it's now acting as resistance. And in the formation of this wave 4, I'm also expecting to see an ABC corrective structure, because the wave 4 to the lower side is a corrective wave, having the wave C fully maximizing that target area and giving us the low for that fourth wave to the lower side. And I believe once this move plays out, this will be another perfect entry to get back into Quant, so that we can be able to ride this move to the upside in this impulsive wave to the upside in the formation of that wave 5, and once the wave 5 plays out, then we can complete a larger Elliot wave count 1 after seeing that 5 wave structure, which is a fractal wave within the formation of that larger Elliot wave count 3 that I'm expecting on the long term scenarios. So that is what I'm expecting here on the short term scenarios. And also, in case we fully maximize our target area, we also need to continue watching the key area of support at around the $133.2 mark, which is slightly below our target area. In case we manage to break out of the target area to the lower side, then I'll be expecting that key area of support to give us the support that we need. And also, given that the low for that fourth wave is in, then from there we can expect that bounce to the upside in the formation of that wave 5. And also taking a look at the indicators to see what movements will be supported here on the RSI. On the RSI, we are trading at around the 35 mark, meaning we have massive room for us to support further movements to the lower side to fully maximize the formation of that wave 4 to the lower side. And also taking a look at the MACD, we have been able to print a bearish cross, meaning lower prices are coming our way, and the MACD is fully supporting the formation of that wave 4. So let's be patient and see how that plays out, and I'll be keeping you updated.